Ladies and gentlemen, today the stock market experienced extreme volatility. Volatility that we have not seen in years. And I think it's time to do a little shopping. Now, I have been the guy that has said, don't buy the 10% dip. Don't buy the 15% dip. But now after today and the bear market that we were in, at least briefly, I think it is time to potentially start doing a little bit of shopping. And I think Tesla is one of those companies at the top of the shopping list. And we'll discuss why that is here in this video, what big catalyst we have to look forward to coming tomorrow throughout the rest of this week, and my opinion on this tariff rumor that we got today, and partially why I think it could be time to buy the dip, at least a little bit. This is not the moment to go all in on margin. This is not the moment to spend all of your cash, if you will, but perhaps time to start doing some buying. Let me know what you guys think about this after you watch the video down below in the comment section. Hit the like button and subscribe to the channel to help push this out to as many people as possible as well. And let's get started. So first and foremost, one of the reasons I think it could be time to start doing some shopping is one, the relative outperformance of Tesla. Okay. While look at Nvidia, look at any other, high quality big tech stock or any stock really for that matter, and they're down a lot from where they were in even, March 10th, 11th or so, right? Even the S&P, right? Around March or so, you were in the 570s, 560s. Now, you're at 502 on the SPY, okay? Tesla, is essentially where it was when the SPY was at 560, 570. That is relative outperformance. So that looks good, at least from my perspective. And that's why I'm singling out Tesla here. And I think Tesla at these levels is a place to at least start buying again. On the other side, markets were down 3 to 4% today. And then what happened? A rumor came out that the tariffs were going to be paused for 90 days on all countries besides China. Well, the White House was pretty quick to say, yeah, that's not going to happen. But in that time frame, the markets bounced from the lows like 8.5%. That tells us something. That tells us that the markets are going to be very respondent to good news. Okay. If we get any lick of actual good news, markets are going to explode higher from here. While you could say that's a trading opportunity, I don't like the options and I don't like how they're priced in Tesla and really anything right now. The options are just crazy expensive to the upside, to the downside. I don't think there's a trade with options at this point. But going out and buying shares does seem like a good risk to reward. I've said on this channel for a while now, once you get down about 20%, which is roughly to about 500 on the SPY, that's where I see the risk kind of at parity, where there's roughly 20% downside potential from here and 20% upside potential from here. Now, following today's sell-off, you were 50% retraced from the October 2022 lows. That in and of itself is a pretty important level. Now you're sitting as well right here at this 500-day moving average on the SPY. And perhaps if things do get better, we're going to look back and say this was the last dip or kind of flush moment below the 500-day moving average. We got back above that and started to stabilize a bit. Now that's a possibility. And I think people are kind of getting to the point where they're so bearish they're forgetting the upside potential of this market, right? Tariffs are not in effect yet. If this trade war were to end, or if a policymaker were to panic, like Jerome Powell, that would be an incredibly bullish catalyst for markets, okay? And the bottom line is, what we're trying to figure out, are we going into a recession? Yes or no? That's first and foremost. But number two, even more important than the whole recession question, is what are earnings going to look like on the S&P? If China tariffs stay in effect, which looks like they probably will, that is a big deal, but it may not be enough to cause a recession. It may not be enough to send you down another 20%. I'm imagining there's probably going to be some capitulation from the Trump administration, some concession, or from Powell that can also act as a positive, okay? Now, here's the deal with the whole tariff rumor announcement today. We talked about this a little bit in the last video, but there's a lot of speculation on Twitter that this 90-day pause is actually going to happen, but it wasn't supposed to come out today. That it was supposed to come out tomorrow, the day after, before the tariffs actually go into effect. And from my perspective, that makes sense. We've seen all of this damage to markets before the tariffs even go into effect. What do you think happens if the tariffs do go into effect? Then recession odds get even more extreme. Then, I mean, you're likely to see more margin calls, right? You're likely to see what could be a market meltdown, right? You're at that stage where if someone doesn't fold, you could see a market meltdown. You could see a destabilization of the global financial market, okay? I don't think Trump wants that. I don't think Powell especially wants that. So if Trump doesn't cave, I think Powell caves. If Trump caves, then Powell doesn't cave, right? One of them is going to cave if things continue to get worse from here. Now, you can make an argument that caving, if it's from Powell, is not super great because that indicates there's some pretty extreme stress on the economy. And that would be an overall big flip-flop from what you heard from Powell on Friday. That's what will get interesting if we do hear anything from this emergency meeting that took place today. That's possible, although the Fed does these like meetings quite often during times of volatility and stress, and you normally don't get like emergency rate cuts. But again, if Powell knows something that we don't, if Powell knows that Trump's not going to cave, these tariffs are going to go into effect, maybe that does open the door for emergency rate cuts. And then at that point, you're already down almost 20%. How do the markets take rate cuts? Do they take that as positive? Do they take that as a sign of, oh shit, the economy is going to continue to weaken and we have to price this in even more? What I'm trying to say here is I think you've priced in a lot of bad news quickly, clearly. And although I don't see extreme levels of fear out there, like TLT down 3% today, that's not screaming fear to me. Okay, it's just not. If there was real fear out there, TLT would be up 3% today. It's not. But when you look at something like the VIX is in the 50s today. Okay, hit as high as 60. That is showing fear. Percent of stocks trading above their 50-day moving average at 5% is showing severe weakness. The S&P overall is very oversold. The S&P has a daily RSI of 23. That's like similar levels you had during the COVID crash, right? Where the daily RSI got to 20, okay? You're at that level of extreme downside pressure. So while the lows may not be in, I do think a tradable bottom could be forming. Now, obviously, it depends on what happens here with tariffs and if the Fed responds or if there's a delay in tariffs, something along those lines. But I do think this is an opportunity where you can start to do some buying. The last thing you would want is to not do any buying here and then we recover. You're like, oh crap, I was too scared to do buying, any kind of buying. I just sat on my hands because I thought markets were going to go lower. And that's fine to a certain degree. But you also have to acknowledge that you have no idea what's going to happen. I have no idea what's going to happen. You know, that's the bottom line. You have to look at things from a risk-reward perspective. What's the risk? What's the reward? The risk is 20% additional downside from here. The upside risk is 20% upside from here. So you're almost at a pretty even, again, equilibrium with risk to reward. Now, I specifically like Tesla here because you're pricing in, I mean, demand destruction from Elon's political affiliations. There's almost nobody paying attention to the robotaxi launch in June. All of the positive things going on at Tesla are just being overlooked. So I think that adds another layer to why I'm starting to get a little bit more bullish on Tesla here, right? Starting to think now could be a good time to start doing some buying. And not to mention the fact the stock is down 52.5% at the time of recording this video. Well, a little bit more than that, actually. Tesla's down almost 53% from all-time highs. Okay, so to get back to new all-time highs, I mean, you're looking at a return of like 112%. I think that could happen this year if there is good news, if there is a trade deal worked out, if tensions die down. So sure, could Tesla fall further? Yes, I've talked about this in multiple videos now. In the worst case scenario, like we're talking deep recession, nobody caves on tariffs, Jerome Powell's late to start accommodating things, deep recession. You're looking at Tesla, a $50 stock. You got to be prepared for that. That's extreme. I think there's probably a 5% chance of that. Maybe 7% chance of that. It's not something you should wait for to do all of your buying. Like it may not ever come. Okay. Now, what could happen is Tesla in the 130s to 100. That is a little bit more reasonable. I would say that's maybe a 35% chance. Okay. Tesla at 180 to 150 is probably a 50% chance. Now, there's probably like a 30% chance that Tesla goes back to 300 or 350 from here if tensions die down. So it's balancing kind of, again, the risk reward here. And I just think people are way too bearish on Tesla. When Dan Ives comes out and drops his price target, almost $200 on Tesla, that's probably a pretty good contrarian indicator that now could be a good time to buy Tesla. When some of your biggest bulls with the highest price targets are starting to throw in the towel and get, not bearish, but not nearly as bullish as they were, I think that tends to be a good sign. Now, with that said, we do have some catalysts coming out tomorrow. Tomorrow, we are going to get the NFIB Business Optimism Index. Some estimates have this going up. Some estimates have this going down. I don't know how much of a catalyst it is at this point. Again, we all want to know what's going to happen with tariffs. Are they actually going to go into effect? Is it just negotiations? Is there going to be a pause? In which I don't think that rumor came from nowhere. I think there is some merit to that rumor of a 90-day pause. Okay, just question is, when does it get announced? When does it go into effect? Again, does it go into effect? Just my view here is that is probably real news, just premature news. Someone leaked that was not supposed to, okay, beforehand, right? Tomorrow, you also get a speech from Fed Daily. And again, at some point as well, no news will start to turn into good news. If we start to get no news and things kind of start to stabilize and there's no new developments, that also kind of turns into a positive risk on environment. When you're down, again, almost 20% from all-time highs. Now, on Wednesday, you have FOMC minutes and Fed Barkin that will speak. Inflation rate out of China. None of that really matters, though. Like, regional Fed speakers really don't matter too much here. FOMC minutes doesn't matter here. Thursday, you're going to have CPI. And unfortunately, I really don't think this matters either right now. Inflation's just not the catalyst, okay? If we get inflation from tariffs, it's going to take months to actually show up, right? It's not going to start showing up now in the data, right? So I don't think CPI is a big catalyst this week. I think it's all about tariffs. That's it, because of the economic impact that it will have. Now, Friday is, I think, your big day as far as catalysts that can move markets. You have PPI, again, not really a big catalyst, kind of like CPI. Michigan consumer sentiment. Now, what people will pay attention to is the economy, current conditions, and consumer expectations. You're expecting these numbers to both fall, okay? So you're not expecting a good report on Friday. Now, inflation expectations also will be important. You're not expecting those to move, okay? Now, this survey is very political. Keep that in mind. So, it's kind of wonky, but Wall Street has been paying attention to it, okay? They do care about these numbers. So at least in the short term, I'm starting to look at things like maybe there is room for an upside surprise. Maybe the rumor today is true, but it's just a little delayed, right? You're down 20% before the tariffs go into effect. You have to have, some kind of positive catalyst to offset that. Or if these tariffs go into effect and there's nothing to, backstop us, margin calls will continue, stocks will continue to fall. Okay, if Trump's serious about these tariffs, they cannot be implemented in their current form, right? Even getting down to like a 30% tariff on China at this point, something that is still extreme, would now be seen as a positive catalyst. So you've swung so far to the extreme side, you could swing towards the extreme, not so extreme side of tariffs. Like cut all of the country's tariffs in half besides the 10% tariff. I don't think that's going away on all countries. And yeah, that would still be extreme, but not nearly as bad as kind of what we're looking at now. Does that make sense? So Trump can now get away with doing something large and make it seem like good news. That I think is a positive kind of environment for stocks, for a stock like Tesla in the short term in this environment. But I will emphasize again, this is not, I believe, the time to be in margin. This is not the time to be, again, super leveraged. You want to be raising as much cash as possible, picking up extra shifts at your job, trying to make as much money in your real life as possible to get ready. If we do fall another 20%, you want to have cash ready to buy, and that's when I would start to personally use some margin. Not at these levels. There's still too much meat on the bone, if you will, to the downside for my comfort using margin. So that is a no-no in my personal opinion. So let me know what you think about all of this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.